All right, good morning, everybody. So we made it through one of the bigger events this week. The State of the Union is now behind us. We still have the NVDA earnings, so want to keep that one front and center. There's a lot connected to NVIDIA, right? Between the things that it has invested in, you can see that in the F-13 filing, to the suppliers that are connected to it. It is a large web of companies, services. So, depending on the outcome of the earnings, the market is very likely going to get out of the box finally, up or down. Really, it's very likely to just be binary, right? So, whatever the market takes away from the NVIDIA earnings, that's what we're going to get. It would not surprise me into this earnings if we don't stay sideways, or um, we've already started a breakout, but that doesn't mean we get to keep it. And I would expect, especially after lunch today, that the closer we get to the end of the day, the less movement we get out of the markets. So we might be moving now. Retracing what we've already taken would be pretty obvious. And then even if we don't retrace it, just stalling out at some point and holding sideways into the close would not be a surprise, right? It'd be the baseline bet for today. So as you can see, we're green almost around the world. We're green, a little bit red. Maybe they're just still playing catch up. Japan up the most, 1.75%. So everybody has got that warm, fuzzy feeling. It's whether or not we can keep it is going to be the issue. We do have some Fed speakers today. We always have Fed speakers. And if you keep track of the ones who are speaking on a day-to-day basis, you'll kind of get familiar with their tone, the topics that they like to hit on, and you'll recognize whether or not they generate waves in the market. Most of the time they don't, right? Their goal is to come out, run their mouth. It's like Operation Don't Rock the Boat. They don't want to move the markets. They're not trying to move the markets. They just want to come out, rattle their teeth, and go back in the hole without ever really having said anything at all. So, unless they have some sort of gotcha moment where somebody asks them a question just so that they can turn it around on them, or they get misrepresented, misquoted, or they just straight up say something they didn't mean to say, it's very likely that any of the comments coming out of these Fed speakers are not going to move the markets. And you shouldn't expect that they would. Think about how many Fed speakers we have talking every week. If they were all out there moving the markets, then we would just have these gyrations and big swings all over the place. So can they? Yes, absolutely, they can move the market. But we shouldn't anticipate that every single Fed speaker, every time they're going to talk, is going to be moving the market. No. It is Wednesday, so we'll get the Strategic Petroleum Reserves, the EIA crude oil data. This will come in at 10:30, so keep your eye on that. Oil is not the driver that it was, 20 years ago, 10 years ago. But it's not to say that oil can't move markets, right? Energy costs are a big deal. So we want to pay attention to oil when it comes out. But this is another one that most of the time doesn't really move the markets. It can. That's why you want to keep your eye on the clock and see when this data comes in. But I wouldn't expect anything out of the crude oil inventories. We've got some auctions today, but they're on the smaller end or in the front end and likely not to cause us any problems. Still, they are coming in, so want to be aware of that. And the White House risk for today is really low. It's very likely he's just going to sit back and let the news cycle digest the State of the Union and not interrupt that. The call wall moved again. It rolled back up to its previous level. We didn't get a new level higher than that. It's just back up to where it was. So we're still maintaining that channel that we're in with the call wall moving down a little, up a little, down a little, up a little. We're not getting anywhere with that. So as I mentioned, we're getting an inside day breakout. Clearly 69.11 cog line, yesterday's high. We're outside of that. We set a Globex high last night. We managed to punch through that this morning. Now we've got a new one. Looks like we're making a run on that 69.32 cog line. It's close to last week's high, so we'll want to focus on what we had last week. Step out here to the daily for a moment. We've been IX10. That has continued now for a while. So this was the bar that set it all in motion. This is the inside day. Anything past that puts us in IX10. So that one, that one, and that one. Those are closed days. We're done with them. And then we have today. Now, today isn't done yet, obviously, but it is half done. And we are challenging the upper edge of this range. And we've been outside the range before, right? We've continued to challenge the edges. We just keep coming back inside the box to close inside. So this is compression at its finest. It's a very clearly defined range. The longer we stay in a range like this, the more we build structure up on each side. Think about it. Nobody knows they're wrong. If you're short, you've got all the bias in the world. You won't know you're wrong until we come out of this the wrong direction, right? Same thing. If you're long, got all the bias in the world, you won't know you're wrong until we come out of it the wrong direction. So both sides can just pile in here, and it builds up more and more and more structure around it. So to get out of it, we're going to need a significant catalyst. Most of the time, that comes in with an explosive push, some big breakdown or breakout bar. But there is the possibility that we just grind our way out. I hate those. It's definitely not one of my favorites, but it can happen. And it'll just be one of those days where we just keep grinding our way slowly higher and higher or lower and lower, wouldn't matter, either side. And then we work our way out of it. The takeaway is that we can't stay here, right? Sooner or later, we're going to get out of this box. The question is, will it be before the close today, or will it be after the close with NVIDIA's earnings? Kind of got this sneaky suspicion that it's going to be after the earnings, not before the close. So we'll see, right? Maybe they'll take a front run, buy the rumor, and sell the news. As you can see, we are back through all of the major moving averages, but that doesn't carry much weight. All right, we've been crossing back and forth through those moving averages for a while now. They're not support or resistance, they're just context. $69.50 is today's ADR half. So if we can get above 69.32, then we've got an 18-point run up to the ADR half. And that's very likely all it owes us in front of NVIDIA's earnings. If we can even get that, I would be surprised. This is Friday's high, so that's last week's high. The push that we're looking at right now is very likely going to stall out around that. So let's see what happens at 69.32, whether or not we can get above it and stay above it to continue this run. Otherwise, a breakout reversal, something like the 111 or the 1236, would be more in line with my expectations, and that we come back inside the box and we wait on earnings. All right, today's floor pivot is higher than yesterday's. That's bullish. Price opened above it. That's also bullish. And we have not even touched the central pivot channel or the floor pivot channel. And that's also bullish. On the one hand, markets generally hit their floor pivot. It's what they do. Today's floor pivot is all the way down here at 68.80. We would have to break 68.90 channel top, get through the weekly pivot, and then get to our daily pivot. I'm not saying that we can't do that, but we would need some negativity to come in to be able to accomplish that. Right now it's an MDP, that's a missed daily pivot. It doesn't count today. However, we got to wait until tomorrow, because at any point today we could go down there and then we would hit it, and well, then it wouldn't be a missed daily pivot. So if we can make it through the whole day without hitting it, then we'll count it. And it's not necessarily a bad thing, especially if we're thinking about making our way back up, right? So this isn't really a great example of a scoop pattern, but if we are looking to slowly work our way up 3, 4, 5 candles, instead of like a TRB that would get back up there in a single candle, maybe it would look a bit like this, multiple bars back up. In that scenario, that bullish bias can kick off with an MDP, and we would be looking to count those consecutively on the way up, with price closing higher than the previous day's close and having moved far enough that it outruns the pivot so that we don't tag it accidentally in the overnight or in the trading day, because there's got to be some pullback. So we have to be able to outrun it enough so that when we do pull back, we don't accidentally tag it, right? Even last night, we had that pullback and we missed the pivot. So it's a good first step, seeing this missed daily pivot, but just keep in mind, it doesn't count yet. We have to go into the close without having hit it, and we need to keep the advance significant enough that the next day's pivot will still be far enough away that we don't hit that one either. Today's daily floor pivot channel's pretty wide, and a wide channel implies that the breakout won't stick. Just keep in mind that this doesn't make price break out. It won't stop it from breaking out. It doesn't move price, right? It's just giving us some insight on what to expect out of price. A wide channel implies that even if we do break out like we did today, that the breakout won't stick and that we'll come back in again. for the week, the distribution really hasn't given us much. The shallow spot is last week's distribution centerpiece. You can see how it got really shallow around the point of control, but they've put in a lot of work above and below. So we really don't have anything here yet. Last week was more of the classic distribution. This week we got the dual but individual distributions. And now we're challenging the upper edge of the week and last week, and we're looking for that breakout. So we don't have anything up here really that could shine a light on what we're focused on. If we do continue to push to the upside, we've got a point of control from a few weeks back, 69.80. If we get within this zone, we'll begin to magnetize towards that level. So we just got to get above 69.60, and then it's likely that we just keep moving right up into that 69.80. Be careful though, because that 69.60, while we're still underneath it, can act as a resistance level. We could just run up and bounce off the bottom of that thing. Yeah, I'm thinking the same thing, Jay, that it's going to be a lot like an FOMC day. Um, that will stall out and we'll spend the afternoon in a relatively tight range, just chopping, kind of like this maybe, right? That we just go into the close with some kind of consolidated range. Because who wants to pony up and get big and make bets right in front of, you know, something so market encompassing like that? I wouldn't. So I agree with you. 10-day, 30-minute volume profile in TPO. Yeah. We're just about done with that lump that was over our head. By the end of the day today, we should be done with it. So unless we run back up there today and put some new footprints up there, by tomorrow, we should have a narrower range. Not by much, but we're working our way through it. If this does become our new range, then we'll want to focus on where we go from here and getting out of this box, right? Which is what we've been focused on for 2 weeks now. This very narrow concentration. Just got to get it done. The point of control reference that we kept the other day, we're done with that. There's no new VPOC from yesterday. We've crossed through that line multiple times. It's not in an area that I even consider needs to be marked because it's 6,900 basically, and that's a big options level. So I'm not going to mark it. The textbooks will tell you to do that though. To mark the low, the value area high, the point of control every day and carry it forward into today's trading. I have enough. My own pivots are much more dynamic and I trust them and I use them. I'd rather not just generically pull these forward, but it's not to say they don't have any value whatsoever. So if you're new to trading and you want more pivots, then bring those over. At least it's consistent. You can do it every day. Nothing really stands out this morning other than the defense that they're putting in right underneath that 69.32 level. We ran into a lot of liquidity here. So we're going to try to digest that, see if we can finish it off. And if we finish it off and there's nothing left, then we're going to seek out more higher. Otherwise, if we can't finish our plate, then we're going to have to pull back. All right, that gray line is Friday's close. You can see we're challenging that. And then above that, we've got last week's high. So if we can get through last week's high, then we'll focus on this week's weekly expected move, 70.36. Quite a ways off, right? It's another 100 points higher. And it's not that we want to focus on that today, right? Because we've got NVDA, and I just don't see us running 100 points higher in front of NVIDIA's earnings. But we could get a wick out and then come back in again, right? That would not surprise me even a little bit. The question will be, where do we turn around if we do get the breakout? And I really like 111 or maybe the 1236. We are back above the 10-week, but we're still hovering down at the 10-week, so we need to get away from that and start this push. I've been looking for new highs on this thing for almost a, well, I'd say almost a year, but it seems like almost a year, like maybe half a year. Months and months I've been waiting for this new high to kick everything off. We need to get 2.5 to 3.5% above the 10-week moving average, and that's a very tall order. What the catalyst is going to be to give us such a significant driver, I have no idea, but it's going to have to be something really good. I don't think NVIDIA's got it in it to give us what we're looking for here. It's very likely going to need to be something else, whatever that might be. So maybe it'll be bad news that turns into good news because the bad news is going to force a rate cut. Maybe it's something like that, right? And we do have a lot of bricks still in the wall of worry that we need to deal with. So, any one of those bricks being removed could be the spark or the catalyst that finally gets that drive. But I continue to look every week for something that's going to be big enough and strong enough and last long enough to give us this drive. I got nothing. Taking a look at the 10-day, we're back above the 10-day, but we're still holding within that imaginary collar that I focus on, 0.5% above and 0.5% below. So sitting inside this zone, we're pretty much in the eye of the storm. It's calm. We don't really have a lot of drama here, but we can't get outside of that without getting into the chaos. So being here is not bad. It's just not helpful, right? It's really can't get much done from this point. So we got to get outside of this range. The main driver when we come to this page every day is asking the question, have we moved too far? And does it owe us any sort of pullback or mean reversion? And we've been sideways for 5 days. So, we really didn't even need to come over here. We already knew the answer. No, we haven't moved too far too fast because we haven't moved at all. We're in the same spot we were at Friday. Thanks, Captain Obvious. Jay, I know you spend a lot of time down in Mexico. Are you over there right now or are you back? And did all this drama over the last few days impact where you do normally go when you're down in Mexico? Looking at what's down this morning, we got the Mag 7 down volume, down almost 1.5. Over a 5-day period, it was up about 6%. So seeing that down volume down is a good thing. It's a double negative. If you're into math, you understand that. If not, how are you going to be a trader if you don't know how to do math? Take the time to find some free math courses on YouTube. I promise it will make you better. At the very least, you'll understand what you're looking at a lot more. right? Most people think they suck at math, and really the school just pushed you through to because they don't care. As long as you had something resembling passing grades, they didn't care if you actually understood what the hell you were looking at, as long as you quote passed. So you don't suck at math, you just didn't learn how to do it. Go back, start over, do it right. Thank me later. Solar's down, but not down enough. Bonds and China all down, but not enough. We would need a lot more out of them. Flip it over, take a look at the other side. Bitcoin is up. The Mag 7 up volume is up. Gold miners and junior miners, metals and mining, uranium. A different China. You know, it's funny. We used to always lump emerging markets as a China ETF because really most of the weighting in it was China. I have argued for years that China does not deserve the designation of an emerging market, but doesn't matter, right? It's not like they ask my opinion. But if you look at the weighting that's in it and the way things have changed in the last few years, it really doesn't represent China like it used to. So maybe we just got to get resolved to that fact and quit lumping it in there with China. Nat gas, chips, generic tech, UFO is up. You know, when we look in the pre-market at the things that are up, we're always on the hunt for this strange little situation like a form factor rotation or these small cap resurgence. And UFO is a good one for that. There's another one called IPO. It's another ETF, which is also good for kind of checking the same thing. So it's not to say that you necessarily want to trade that product. You just want to keep your eye on it. It's a good way to keep track of money flow and rotation. And if we're getting into low float speculative trash and expanding our risk. So it's always a little bullish to me when I see things like IPO and UFO up in the pre-market, especially when we have things like Bitcoin up in the pre-market, which is one of the poster childs for risk. We do have expanded tech. You know, software has been just kicked in the face since November, December of last year. And expanded tech is full of software. So seeing that up even a little bit, I don't see that as bullish. More to me, it's a bit of a bounce after falling almost 5% in a 5-day period. Has to bounce at some point. So today is pretty clear. It's not much different than any other day. GTFO, we got to get out of the box. The only thing that's different this morning is that we're already outside of yesterday's range. Typically, we've got our Globex range, and then we look left and we have yesterday's range, and we have to get out of one and then get out of the other. We're already outside of one, so now we just got to keep it. Mark out yesterday's high. If we do begin to fade back, then yesterday's high is going to be an issue. And then we've got our own Globex midpoint. Just line those two up. It's very likely that they're almost on top of each other. Not so much, huh? So a little bit of a band there. 69.11 cog line. 69.32 cog line is just overhead. So if we continue this push to the upside, that's what we've got to deal with. So if we begin to fade back, focus on the midpoint. It's yesterday's high. It's the Globex mid. They're almost on top of each other. Those 2 points don't even matter, right? If we cut through that, focus on the low, and then through the low, we'll focus on yesterday's levels. Starting with yesterday's mid, Come on, you can do it. 68.70. It's a long ways off. I really don't expect that level of weakness. I wouldn't be surprised at all if we just stay in this range and chop into NVIDIA's earnings. We could get a little more out of it to the upside, something like 69.50. That would give us, a good 60 points between 68.90 and 69.50. Good 60-point range to just dance around in until we get the earnings tonight. So we just got to see how it plays out. The good thing is we've got our levels. So a break to the upside, aim for 69.50. We've been running 50s for months, so that should not be a surprise because we are above 68.50. We want to target 69.50. If we get above 69.50, then we'll aim for higher levels above that. The R1 today is 69.32. Imagine that, right on the cog line. I couldn't make that up if I wanted to. So, take what we can get. If we get that upside breakout through the Globex range that we're building out here, this little consolidation, then 32 is the target. We'd have to get through that to get to 50, right? And that's R1. The risk here is that we get to R1, we turn around and we start moving back the other way. There's an old market phrase that says R1, S2. Well, here's R1 and here's S2 way down here. At least I think that's the 2. That might be S1 and 2 would be even lower than that. So even if we went from R1 to S1, you're looking at 68.50. I don't see any reason we would get that much drama this morning unless there's a headline coming that we don't know about yet, right? Which is, it's always possible. We could just get some random headline. One of those Fed speakers might stuff their foot in their mouth and chew on their shoelaces. Who knows, right? So from what we have on the calendar and we have on the docket at the moment, there's no reason to anticipate that level of chaos. But if some kind of gotcha moment comes in, or crude oil inventories could throw us a curveball, something like that. Not expecting it. So temper your expectations today. I know we started with a rally. It feels good. The market seems a little bullish. Don't buy into the hype. All right. Yeah, we could slowly just grind our way up to 69.50 plus some and keep going. And if we do that, it's going to suck because, those slow grind days, they just suck. But temper your enthusiasm and be prepared for a day where we just retrace what we've already taken and we sit tight and wait for earnings. All right. So that's what I got for you guys. Be careful, be safe, watch the clock. I'll see y'all tomorrow.